Hello, everyone. It's a big day. Inflation. I'm gonna share quickly the screen. Basically, welcome everyone. Can see that everyone joined 20 minutes before, guys. It was the very first time that I did it exactly on spot on the actual release. I'm really sorry. Now that I know that you prefer to be early, like early birds, I will be live earlier. So, guys, oh my God, Jesus Christ, I don't know what to say. So we have seen inflation is out. You can see all these volatility. Look at how huge these tails are. Hopefully you haven't even managed to check the sound and everything, but hopefully you are all here. I can see a lot of comments. Yes, guys, we're live. We are got live already. So huge volatility on the announcement. I was a well anticipated release, of course. So we're seeing a lot of right now. There's a lot of noise. As you can see, there's no clear direction. Basically, what we got today, guys, from the inflation. I'm gonna share the screen as well. I'm gonna share the calendar as well. How can I do it? Quickly. Sorry for that. Come on, Andrea. So look at that. Look at that. That was a bit, okay? Definitely not something that the Fed wanted. And so a bit rising inflation, growing inflation. We did expect it that it will present some gains, but at least in line with the forecast and not a bit. Especially if we exclude the food and energy, we could see that there's still growth, 0.3% than the 0.2% expected. Inflation 0.2 from 0.1%, and the headlines is the ones that they have been in focus. Unfortunately, we have seen that the headline rose as well, the year-to-year basis, 2.4% for inflation and 3.3% excluding food and services. I'm gonna jump back to the dollar, okay? Obviously, so yeah, come on, back into the dollar. So what these data mean, guys, for the for the Fed, basically, a stubbornly high inflation, right? So okay, we pretty much were a bit suspicious after we've seen the solid NFP last week. Okay, so it seems that it led to a quite stubborn, a quite solid inflation as well. So there is a lot of pressure right now. Okay, there is a lot of pressure. If the November's NFPs are still provide a pretty solid market, okay, a pretty solid label market, that would suggest that the Fed unfortunately needs to slow down a bit their plans for rate cuts, okay? So delay a bit the rate cuts as well. But especially if we have next week solid retail sales, solid production numbers, so that now all this situation shadows a bit the prospect of the rate cut in November. Even though the FOMC minutes last night, they didn't just, oops, sorry, I wasn't sharing them. Even though, here we are, my bad. Just a second, guys, something is going on with the screen. Okay, we are back. So even though the FOMC minutes yesterday provided basically signal that we're gonna have a rate, but the disagreement was regarding how big the size of the rate cut is, right? But now we might see back in the table the possibility of holding rates unchanged. So that's my own thinking, considering that, oh, what's going on? Solid labor market signals from the LFP, quite solid inflation today. If we have next week also solid retail sales and production cut, and even if we have a repetition of NFP on November and a pretty solid NFP next time, I mean November 1st as well, it's like the data is warning them, stop, pause a bit, or be a bit more conservative, okay? Tiny steps, tiny cuts every single time. So what that means for the dollar? Unfortunately, a lot of indecision. This is what it means, okay? A lot of indecision, because basically the data, okay, should favor dollar, okay? Why? Because the data suggests that we might have on the table the possibility of holding the rates unchanged in the next meeting, or proceeding with lower rate cuts. Okay, so that theoretically should have been dollar positive, because more rate cuts, weaker dollar. Less rate cuts or no rate cuts, it should have been positive for the dollar. But this is it. Basically, markets right now are trying to understand what's going on, to understand what that means for the Fed, to understand what that means for the future rate cuts, to understand what that means for the future of the monetary policy. That's why we have seen, obviously, huge volatility, but back into the range that we have seen it since yesterday, right? So obviously we have, this is a 15 minute, by the way, chart, guys, dollar 15 minutes chart, okay? And look at that. It's back. It's back into the range. Too early to tell. We need to wait for that candle to close, or even the 30 minutes chart, because the very first 30 minutes are the most volatile ones. They are the market noise ones, okay? So we're gonna have a clear view of the direction of the dollar 30 minutes after the announcement. Similar with trading the NFP strategy. For anyone that is trading the news, market noise should be out before taking any decision, unless if you have a trading the new strategy in place. But guys, a lot of indecision, okay? It's not a matter of a size of a rate cut this time. It's a matter that we might have back in the table the possibility of holding rates unchanged next month. And that's my own understanding, because we still have a lot of data to see until November 7th. But that let's say, these data that, let's say, are not really favoring the possibility of 50 rate cuts, and neither 25 rate cuts. But okay, we still need to see retail sales, we need to see product numbers, we still need to see the NFP for November, so that will definitely make everything clearer. But yeah, as I said, this theoretically, this data should support the dollar, okay? Because they give to the market participants the indication that we might have a slower rate slower pace for the rate cuts, or even consider some pause for the time being. Out of curiosity, I'm gonna add the Fed Funds Future Watch just to see whether they have been updated, especially after the data right now. Okay, you see, 15 minutes chart, the bulls are trying to push dollar higher. Someone is suggesting euro dollar. You're saying euro dollar bearish. I guess you're selling Vital 30. That's the 30 minutes chart for euro dollar. Okay, it's a lot of indecision. Anyway, the euro dollar has been to the downside for 2 weeks now under significant pressure. And have in mind, guys, this nice, beautiful, absolutely beautiful M formation. Okay, the neckline has broken. This is the neckline. Okay, don't forget that the neckline has broken. So let me measure the distance of the neckline from the tops. And so here we are. Okay. The reason why I measure the distance is just to find out a range. I mean, a potential area that Eurodollar could reach if it continues this downwards pressure. So, if we see further dip of euro dollar, okay, the an important and key support level, it will be the 108 107.85 territory. It is based on the M formation, okay, and the break of M formation. Also, sorry for that, it used to be a nice support level back in July. Okay, it looks that it's also halfway. I mean, by finding, let me just measure it. I have a Fibonacci extension over here, if you notice, okay, from this swing to this swing and to this swing, I have put a Fibonacci extension. And apparently, I believe, let me measure the distance from the 161.8 Fibonacci extension and the 261 Fibonacci extension. And yes, this area that I find out from measuring the break, the M formation, it's halfway between, is actually the midpoint between the two Fibonacci levels. So that suggests that's a really strong support level. Okay, if and only if we see the euro dollar continue to the downside momentum for euro dollar, because you said vital trade. I guess you're selling. Yeah, indeed, it has been in a bearish trend, sharp bearish trend for the last 2 weeks. Momentum remains negative. It's at RSI is at 34, right? So momentum overall, it is negative. Let me just I would like also to add my MACD just to see what's going on. Yeah, turn negative, even though the signal line is still at 0, but it points lower. You see that there is some, let's say, increasing bearish bias. Okay, so let me just zoom in the 4-hour chart and the 1-hour chart for euro dollar. I'm still in euro dollar 1-hour chart. Remains below its pivot point the whole day. First support was breached, but not broken yet, at least. So for any intraday traders, have in mind, guys, that the next support levels are at 0.10920, 10907, 10870, 76. That's for euro dollar. I want to keep this set up, so I'm gonna show you another intraday. Gonna show you another setup for our. Okay, I have another setup over here for our euro dollar. Where is it? Sorry for that. I need the Hakenashis. Okay, euro dollar. I'm still in euro dollar, guys. Down, steady a bit. So yeah, there is no clarity. You need, in order for the bearish trend to continue, you need this kind of performance. Solid bearish body candles, big ones, and without the tail at the top. This is something that could confirm further dip for euro dollar. Okay, this is basically my high Kanashi, just for reassurance. Now. Okay, first come, first serve. Euro dollar is done. Let's go to gold. Yeah, yep. Gold. How gold actually had been really um, um, weird, I will say. Not precisely. I mean, there is an explanation behind this dip, but I wasn't expecting it to actually manage to break, to breach the 2600 territory. So gold, guys, if you notice it, sorry, let me put my setup. uh, da, 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 Oops, wrong template. Here we are. As you can see, it's trying. This is the daily chart for gold. Okay, recovered yesterday's session, but as you can see, this support is still held. Uh, overall, it goes without saying that gold remains in a positive trend, right? I mean, if I connect, even if I connect my the latest, come on. Okay, it's been higher highs, higher lows. You can see that MACD over here keeps posting higher hills, higher. You see, 1, 2, 3 higher highs, right? Momentum is positive. Overall trend of gold is positive. Momentum is positive. Fundamental support gold. Now, what happens intraday and what we are facing right now? Look at this. So, I guess the dollar reverted a bit. Yeah, it closed unchanged. That's the dollar. And currently, sellers are pushing lower. Let me see whether there is something else happened that could have affected our dollar. We have jobless claims out. Let me check a bit what's going on. Uh, okay, guys, we have a jump in the jobless claims. 258 from 230 expected. So it seems that the market participants are trying to hang from somewhere and they find the jobless claims. That's why this jump in the initial jobless claims it seems that it affected the dollar, and we've seen a bit of a significant pressure actually. We're still within the market noise though, so I would really want this candle to close as well in order to be convinced that it will move down, because as I said, the fundamentals um, could even bring back in play the possibility of holding rates unchanged, or even proceed with a tiny rate cut rather than an aggressive rate cut. So yeah, it seems that the large increase in the initial jobless claims could be centered um, from the market participants. So yeah, you see, the jump in jobless claims, guys, indicates that people have applied for claims. They don't have a job. More people actually apply for claims for the very first time. So what that indicates is slowdown in the labor market. But on the flip side, we have seen NFP that was really strong. On the flip side, we have inflation also that it was quite solid today. So they're trying. They have. So basically, we have dollar positive inflation. Okay, dollar negative jobless claims. So markets need to digest both of them. They need to figure out what they're where they will settle. Jobless claims is a weekly reading anyway, so mm, so uh, uh, we cannot really tell whether this is the excitement or the or I mean, or some profit taking due to the or risk appetite due to the jobless claims, or whether it will actually the dollar will actually settle. But with this mixed data right now, uh, it should get back into the range. Let's wait and see. Okay. So what I was saying, I was checking gold, which spiked significantly, reverted back the losses that we have seen yesterday. This is gold. I'm back in gold. Sorry, back in gold. Anyway, we've seen some improvement, some rebounds. Some rebound yesterday as well. Okay, so currently at the key resistance area. Okay, momentum improved intraday. Let me just. Sorry, it's a bit messy. I know. So I'm gonna stick back to the. Okay, the new candle. 15 minutes chart, positive, extending higher. 9 and 5 exponential moving average in this 15 minutes chart is pointing higher. RSI also points higher. So there is some positive momentum intraday, actually currently in the very, very short term, because this is a 15 minutes chart for gold, guys. So the next, let me just I would like to measure this rebound in order to, where is it? In order to identify the next resistance levels. So the next resistance level for gold is the 26.2850, 26.2850, 26.31, and if it moves further to the upside it's 26.36, guys. Let me cross check it as well. Okay, and so mm, so okay, very different from the pivot point analysis, but no, actually they're, am I seeing right? No, it's the only one that clashes with the pivot point is 138. But to be honest, in this case, it seems that the Fibonacci extension, they are more appropriate. Why? Because they coincide with some swing lows that we have seen on Monday and Friday. Okay, so these are the next resistance levels. We have seen already the break above and close above the first resistance of the day already. So this candle, this 15 minutes candle, which will close in 6 minutes from now, will clarify whether we're gonna see the asset, the price action closing above yesterday's top, yesterday's high. This will open the doors further to the upside, potentially to the resistance levels that we have seen earlier. So look at this daily chart, okay? You see, it's already, let me get rid of some at least. Okay, you see, it's already retesting the highs, yesterday's highs. So if I zoom in, okay, here we are. In less than 5 minutes from now, we gonna see whether we'll manage this candle to close above yesterday's highs, which is at 26.24.50. 17. Okay, so that could attract even more buyers. But I'm a bit skeptical, to be honest, even though I'm a bit skeptical because of the mixed data. So, guys, gold, everyone is asking about gold. Okay, then the thing with gold over here is that the strike, let's say that the appreciation, the recovery started since morning. So where's the yeah actually it's the gold started improving, started rising since the Asia open. Okay, you see that momentum also was improving. This is the 1 hour chart in gold, but it didn't turn positive yet. Okay, it's a neutral zone. Can you see that? This is a 1 hour chart. We have seen a rebound the whole day since the Asia open, momentum improving. But look at this. Look at this. It's at zero. It didn't turn positive yet. Signal line remains well below zero. So we cannot really tell that there is sufficient bullish bias to suggest that it could return back to last week's area, last week's levels. Okay, it seems that from the momentum perspective, at least, it seems that this is a limited move. Obviously, we don't have a confirmation yet. We need to wait for this candle to close before we take a decision, but considering the momentum, okay, there is a bit of a lack of momentum, positive momentum, and not only in the 1 hour chart. Even if I zoom into the 30 minutes chart, guys, okay, you can tell me, but Andrea, this is positive. Yeah, it's positive, but it's clashing. Signal line is flat and is on the top of the histogram, so there's no indication that it's moving higher. There's just consolidation. This is the sign that I'm getting from the MACD in the 30 minutes chart. So the same signal that I'm getting from the 1 hour chart, that the bullish bias for the time being is looking limited. So we need confirmation. We need a break and a confirm break above yesterday tops. We need the momentum to be positive in order to suggest that it could get back to last week's range. So my dear friends, you're asking about gold, okay, indeed jumped. It has rebounded since earlier, since the Asia session, but the momentum didn't change. Momentum pretty much presents consolidation intraday. Okay, intraday. The overall outlook didn't really change. Overall, in the medium term and long term picture, gold is still in an upwards rally, okay, in an upwards trend. So if there is that was really pretty much it regarding the gold. If there is anything that you want me to repeat, don't hesitate to stick it on the comments. Okay, let me get I'm a bit late, but nevertheless better late than never. Don't worry, you haven't lost a lot. You did actually, but I will sum up a bit. So I was we're saying that overall, gold remains in a bullish bias, in a positive rally for the medium term, daily, weekly, etc. But intraday, that jump for the time being looks to be limited. We need a confirm just close, guys, and it closed exactly on yesterday's highs. Look at that. Oh God! So there were some. What was that? There was something like some trigger points, basically, with a lot of people targeting that yesterday's top. This is what it was. Yeah. Okay. So close higher and close actually on the, was it exactly on the top, on the yesterday's top? Yeah. And reverted quickly. Hmm. Okay. Yeah. Yeah. That still raises the questions whether that was a limited jump, because yeah, because it quickly reverted, trying to correct. So we might see some further consolidation. Let's wait and see. Nonetheless, pound, but it will retreat back to bearish. I guess you're referring only to the intraday basis, dear Anonymous. Yeah, it's a bit actually. Yeah, you see already. Let me just RSI already points lower. Can you see that? Um, Fast moving average already pointing to the right hand side, which suggests consolidation. As explained earlier, the fact that the momentum uh, is a bit still not like bullish, it's a bit neutral, um, indicates that could, I don't know whether it will return back to bearish. Okay, a confirmation for getting back into a bearish territory could be seen only if we see the asset crossing and closing below the first resistance of the day. But indeed, dear Anonymous, everything point to neutral, neutral to bearish, bearish short-term bias. For confirming further rally, we need to see it advancing more. And momentum is not really helping for the time being, at least. So there is just some noise over here, just quick reversal. I'm gonna get back to the gold in a bit. Now, guys, getting back to dollar. Dollar extended lower. Here we are. Shifting further lower to 102.55. You know what? Let me just, I would like to use my high Kenashi as well for to see what's that's still. This is the dollar index 15 minutes chart. Okay, try to watch over here my asset, and it seems that the bearish bias continues, right, guys? Look at these two candles. These are high Kenashis. Okay, look, let me zoom in a bit. Can you see indecision, but two consecutive bearish ones without any tail at the top? So this suggests that we might see the asset extending further lower. Okay, we are obviously in a 15 minutes chart, but that indicates that we could see the dollar. Let me just, oops, wrong. Sorry, just a second. We are seeing some pressure in the dollar right now. The body of the candles, of these candles, the high Kanashi candles, and the fact that there is no tail at the top suggests that bears are in control currently. So the next level to be closely monitored will be the 102.48 level. That's my 261 Fibonacci level, and also the latest swing high that we've seen over here just yesterday. If I just use my fractals as well to cross check some swings. Okay, yeah, bam, bam. Let me just go higher as well. This latest swing over here. Yeah, so this is in line with the last two swings. Let me put some support levels just to get prepared for any further dip. So, okay, as you can see, Fibonacci's and swings are in line. I mean, they are clashing, so that's a good sign regarding the support levels. So guys, three support levels to be closely monitored for anyone that is trading in an intraday basis, short term, very, very short term, okay? 102.48. A break of that could open the doors another 8 pips lower, 102.39. 8 ticks lower, sorry, that's the appropriate phrasing for dollar index. 8 ticks lower, 102.30. 40. Okay, and the very next, if indeed the selling pressure continues, that would be at the 102.30. Okay, have this in mind. I have used Fibonacci. If Fibonacci is along with the swings, you see, one, twice, three, four times, and the last one was retested 1, 2, 3, 4, 5 times. Okay, clear? Bearish dollar in the short term. 1, 2, actually 1, 2. We're in a second consecutive bearish candle. And it's another 9 minutes to close. Pound. Where is my pound? Cable. Someone asked about cable. Cable similar to the sorry, similar to dollar. It has been in a dip, in a decline for 8 consecutive days in a row. But in contrast with euro dollar, it's still holding this support. I mean, the September's support area. Okay, so that means, let's use the tails as well. So basically it holds above 130.50, 130 territory. Let me just round it up. Here we are. So it's holding above it. So it retested it once, twice, 3 times, 4 times in a row. Today broken the 130.50, but it quickly returned back above it. So these in the medium term are two very important support levels to have in mind, to have your lines on, because if they broke, okay, either tonight or tomorrow night or whatever, if we have daily candle below 130.50, then that could increase the odds of a pullback for euro, for cable. I mean, a change of the trend, or even, let me just, okay, try to extend it. Basically, this is what I'm trying to do. Okay, so can you see that? Swing once, swing twice, reached 61.8, reverted 100%, reverted. Okay, so if I put it closer and go and move the Fibonacci extensions in the latest swing. Okay, so basically, okay, yeah, that is in this, the Fibonacci extension back in June coincides, okay, with the with the 130 territory. Okay, so I'm gonna remove the Fibonacci extension. There's no need to use them, but yeah, round 000 number, important level. And what is also important is to see tonight or within the day whether that level will be broken. If the asset will close below it, 130.50 tonight. Now let's zoom in into the day, into the 1 hour chart to see, or actually 30 minutes chart, just to see where we're standing. So, okay, that was on the actually that was before the announcement. Yes, sorry, that was on the announcement. Sorry, my bad. I was on the announcement, uh, which still hold, regardless of the announcement, he held losses. He held its gains, and he held above 130.50. So it seems that a pound cable, let me just, is holding in this 1, 2, 3, 4 days range. It's been held in this 4 days range. Yeah, guys, is ranging. I'm gonna put it slightly higher. This is a more appropriate one. So it's just some consolidation. Is the word. So further consolidation is the word for cable intraday at least. Now for any scalpers and etc. You can zoom down to 15 or even 5 minutes chart, and as you can see, drifted, rebounded. The body of the tails of this candle suggest a lot of indecision still. So this is a 5 minutes chart. So a bearish Heikenashi in the next 5 minutes could suggest the retest of 130.55, but that's not closed yet. It needs another 3 minutes to close. A bearish candle Heikenashi 5 minutes chart could suggest a possibility of a retest once again of today's bottom. But yeah, consolidation is the word for cable, unless if you're scalpers and you're trading in the very, very short time frame. Yeah, so no, that was cable. That was poundally, not gold. Gold, let's get back to gold. So still okay, didn't close. Yeah, still not ready. Let's get back. Let's go to pound yen, and we're gonna refer it into the gold later on. Dollar yen, dollar yen, dollar yen, dollar yen. Dollar yen, dollar yen. Okay, guys. So for dollar yen, first of all, I'm gonna get back to the Heikenashi setup, and I have a reason for that. Okay, the reason for that is because I want to remind you. Sorry, just to be precise. That it used to be at least, right, in a descending triangle, broken it last week, and since then it's in an uptrend. And it's not only that, so we've seen pretty much yen weakening against the dollar, right? And currently is retesting for a second day in a row the 30.2 Fibonacci level from this big down leg that we have seen in July. This is dollar yen in a daily time frame. Just to ring the bell, okay, that we had some dovish remarks from Ishida, something that adds pressure to the yen. So for you to be prepared for tomorrow's session or tonight's session or next week's session, remember that this level over here, the 149.45, okay, is the confluence of 38.2 Fibonacci level from this huge down leg that we have seen back in July, the confluence with August latest swing high, okay? uh, so, yeah, what I'm trying to say. So, uh, a break of it, an enclosure above it, could open the doors to 151.70, which is a huge, I mean, it's around 170 pips higher, or even to the 65% extension. Okay, so have this in mind for in general. Put some trigger levels, some put some notes, and so on and so forth. Now, in the meantime, let's move down to the 4-hour chart. Let me just check something. It's in an up channel, basically. A really sharp one. Let me just check something, guys. Sorry. It has been in pretty much, I know that it's very, very confusing, that one. So give me a second to set it up properly, okay? It's pretty sharp. Sorry. It's a pretty sharp, come on, channel. Not great channel as well. Okay. Looks a bit better. Connecting the highs. Connected the majority of the lows as well. Touch it, 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 touch it. Sorry. That looks much better. But, wow, this is a 4-hour chart. Dollar yen, sharp. You can see the slope is really sharp. Channel in which today it seems that there is somehow a break below it that raised some concerns regarding whether this rally will still hold. Okay, so that raised some concerns. It rings the bell a bit. Let me. Okay. There is no fractal. Yeah, guys. So keep an eye on this breakout, okay? It might be not certain yet, it might be an early indication that this rally that we have seen since uh, the 30th of September the 30th, okay, 30, might running out of steam. So that's an early indication. You need to monitor it, okay? It might not last, but it's better to keep your eyes open. Nonetheless, what we have so far today is that breakout of the channel that I told you about and consecutive moves lower. Here was the release. It's still down. Let me put the 30-minute chart in there. So it's still pushing lower. So it seems that the sellers are still in control, but I want to also see the momentum. So, okay, actually, because you will get confused, I'm gonna use my MACD and stochastic below the high Kanashis. MACD, stochastic for intraday setup. Okay, RSI. Okay, So, what we have over here, RSI felt below 50 and still pointing a bit lower. MACD is at 0, at least in the 1 hour chart. And there was some diversification over here. Look at that. Oops, sorry. Even though the asset was rising, we got lower highs in MACD, suggesting negative diversification. So this is also in line with the possibility, with the signal that we find out earlier regarding a potential reversal. So you need to keep your eyes open regarding dollar yen, guys. Okay, we have some signals, but no confirmation yet. MACD, along with the breakout of channel, imply that we might be at the end of the uptrend. Okay, so food for thought. Food for thought. For 15 minutes chart, it seems that the bearish bias is still on. Consecutive bearish candles, but the body of the candles are getting smaller, so it might already been out of steam. Okay, might already been out of steam. So if we don't see a confirmed closure of this 15 minutes candle below 148.50, it seems that this decline has already run out of steam. Clear with dollar yen? Everything okay with dollar yen? Oh my god, 200 people over here. I'm getting a bit stressed. Mark, you were here since 3:15, and you mentioned buy gold, sell yen. So I guess you were very, very happy. I guess you are happy right now. um, Okay, don't go. I don't have any question, any comments regarding dollar yen. Hopefully, everyone understood my analysis. If not, let me know. Okay, really appreciate the feedback. By the way, we are already nearly an hour live. So, any other assets that you want me to cover, stick them below. Stick them in the comment section in YouTube, or if you're in Facebook, below in the comment section. If you are in Twitter, again, below the live nonetheless, okay? Um, so. Gold. Oh, someone asked about dollar ZAR. Yeah, Adonis, I'm really sorry. I missed that comment because everyone was asking about gold, euro, dollar, and dollar yen and cable. These four assets. They are the only ones that I have seen in our comments. So dollar ZAR. Sure, sure. Where is my dollar ZAR? Dollar ZAR. Okay. So emerging markets, by the way, guys, since Adonis asked about dollar ZAR, have in mind that the emerging markets are really, really, they have really seen a significant um, pressure ahead of the elections. So this is something that overall, okay, I mean, referring to the overall sentiment. Just have in mind that we might see, especially ZAR, affected by the upcoming elections. Now, um, sorry. Okay, so as I was saying, Libo, this is dollar ZAR. This is a daily chart, so I haven't started the analysis. I just want to put my setup firstly because it has been in a down channel since since March. Yeah, that's the overall, the long term. To be more precise, yeah, it's a much better setup. Yeah, that the one has been in a down channel, has been in a down channel since March, but basically the whole year. So currently, in October, it has been rebounded away from the 17 level, which is the bottom, 1705, rebounded. It came halfway, it came in the mid of the channel, right? A key resistance level, retesting it right now. Okay, but today struggling to break above it. Nonetheless, something that I want you to have in mind is that okay, indeed, the midline, it provides some key strong, it's a strong resistance level, but the fact that parabolic SARS remain well below the asset, and MACD remains, is still rising towards zero and towards positive. Okay, so we've seen the bearish momentum detected. So these are positive signals for dollar ZAR. So a confirmation for further rally could come as long as we see a confirmed closure within the week or next week above the middle line. Okay, that could open some doors further to the upside, and actually, to be more precise, back to the 18 level, 1-8 level, 1-8-10, to be more precise. But yeah, so positive signal from MACD, positive signal from RS parabolic SAR, but it's still lack of confirmation. Confirmation can come as soon as we have a confirmed closure above the middle line. Now, intraday, let's go down. Okay, it ooh ooh, my dear friend Adonis, this is a rounding top, which currently is at the neckline, but there is no breakout yet. Okay, so we need to see the hourly candle. Yeah, there should be the hourly candles for sure, or the 30 minutes candle as well. Basically, closing decisive one, like a strong bearish candle. We need to see closing below the 1754 territory. So only a break and a closure, confirmed closure of the 30 minutes candle, decisive one. It need to be a nice strong body candle in order to suggest that it could, that this rounding bot top, which is a bearish pattern, could be confirmed. And if it's confirmed, then the next support levels are back into, actually I'm gonna use the rounding top, and I'm gonna put it vice versa. Yeah, so the next support levels in this case is 1751, 1749, 1745. Yeah, yeah, but yeah, as I said, rounding top has not been confirmed yet. It will be confirmed as a bearish signal if and only if we have a confirmed break below that neckline. Okay, that 17.54 level. Okay, so bearish intraday and bearish and bullish um, in the daily chart. as well. So that's regarding dollars are. If you want anything further, let me know. Let me know. But yeah, yeah, it's ready to post another higher, lower high. Sorry, this is looks the case. Yeah, you see, this is a 15-minute chart. Down, down. Didn't manage to break the 1754. Doji, doji, trying to extend higher, mm, but it's lacking out of steam. You see, the parabolic SAR are already above the trend. This is a bearish sign. This is a bearish sign. So yeah, bearish intraday, bearish overall as well, dear friend. So let's get back down. Guys, I have covered gold. I have covered gold. I'm gonna do it again. Let's do it again. As I mentioned yesterday, sorry. As I mentioned, how many of you have been here from the very beginning? How many have seen my analysis earlier for gold? I mentioned earlier that, guys, something is going on over here. This boost that was okay. That was 30 minutes ago, the very beginning of this analysis. But I said that, guys, okay, I can see that gold is rising, but something is going on. It seems that this is a limited move, so be careful. Wait for the market noise to calm down a bit, to settle a bit. And I was quite right. Because you see, it's already reverted. It's already below, back into the range that we have seen it since the whole day. Basically, it's back into the range. It's back below resistance level. um so yeah, that jump earlier, it looked a bit limited. So quickly reverted 1 hour gains. So guys, yeah, gold is ranging, and the reason for that is basically the contradictory data that we've seen. Strong inflation, but high claims indicating pressure on the labor market. So a lot of in contrast, pretty in contrast. So there is no clarity over here. There is no clarity, I'm afraid. So what you can do regarding gold is find your support and resistance levels, okay, and just wait. Just wait for confirm. Wait for confirmation. Okay, wait for confirmation. On the upside, the 26, basically yesterday's, let me just on in the intraday, okay, intraday, here we are. Okay, this is the 1 hour chart. Okay, okay, here we are. Intraday, oh, Monday's, basically yesterday's resistance, or yeah, yesterday's resistance, basically this area over here, the 2628 and 2630, remains as a key resistance level for gold. Okay, immediate support, actually immediate support is on the pivot point, obviously, but the key support, an even more important support level, it will be the just come on, will be the trend line, but I'm trying to appropriate set it up. Yeah, here it is. Okay, connecting the latest, the biggest swings. This connecting the low, connecting the bottoms. Let's say the bottom of the 4-hour candle. It gives me a trend line. So a flip to the downside, a further dip for gold could be seen if and only if we see a break below that trend line, or if you prefer to be more precise, below these two swing lows over here, 20, basically the to the 2600 territory, guy, 2600 territory, round double, double fractal, coinciding with the first support of the day, coinciding with the trend line that I have set since 5th of August. Okay, as long as the asset remains above 26,100, we're gonna see rebounds. We're gonna see gold retesting and rebounding at that territory, or even consolidating at that territory. But as I said, gold remains in overall in an upwards trend. Okay, so fundamentals are supporting gold no matter what. So you should know that overall, a potential only a break of 2600 could open the doors to the 200 period moving average, so down to 2580 territory. While on the flip side, you have over here a very key support, a resistance level at 2631, 2630, 26, basically 20, over here on the 2631, yeah, 2631. That would be a key resistance level. This could um, could bring gold back to Mondays or even Fridays a range over here. Okay, but for the time being, is unfortunately unclear. It's consolidating. It already reverted from yesterday's top. So what you can do right now, okay? Be a bit patient. Wait for this candle to close, and once it closes, okay, take the body of the candle, of the previous candle, measure it, and check whether this candle closes below the 50%. I mean, be halfway below the mid of this big candle. That would be a bearish signal for any intraday traders. A closure of this candle below the mid of the previous candle could retest the pivot point or even the bottom of the day at 2606 level. Okay? Clear? Um, okay, euro again. And one more time. Actually, I had a setup in euro. Okay, for anyone that wasn't here, I mentioned that euro, you need to put these lines on for your daily time frame, because we have an M formation, which is a bearish formation, broken the neckline, extending lower. And based on this formation and with the help also of Fibonacci extension, we have cross-checked that if this decline continues in the daily time frame, the next key support levels are the 108.90 and 108 level. Okay, I have measured the M formation, the top with, you see, I have measured this distance. Come on. rectangle. Yeah, I have measured it. I measured the top of the M formation from the neckline, and I have put it over here on the breakout just to see where it could, how low it could get. Okay, and look at this beauty. He pointed out that the bottom of, if this decline continues, the key support level would be the 108 level, while halfway on the most imminent support level is at 108.90. This is a daily time frame analysis, considering that RSI is also suggesting weakness, also indicating bearish performance, and MACD is also turning negative without the signal line crossing negative yet. But if decline continues, yeah, the asset could get down to 108 level. Intraday now, my dear Folarin, regarding the euro dollar, uh, uh, the the momentum is still negative. I mean, okay, we have seen this is the 30 minutes chart. Okay, put the 30 minutes chart. There was a lot of consolidation the whole day, bouncing between, actually consolidating within between the pivot point and the first support of the day. That was on the announcement, but quickly look at that, a doji candle, exactly on the next following the next following candle was a doji one. Okay, and now there is some pressure. Okay, momentum basically is still negative, even though it improved a bit. RSI crossed above 50, but as you can see now is looking that is ready to cross below 50 again. So it seems that the rally didn't last. Um, okay, so yeah, for us, okay, right now we're a bit skeptical. We can see that there is weakness, but without actually seeing a nice strong body candle. So, my dear Folarin, my dear friend, 109.33. Okay, 109.33. These two levels, basically, this is for people trading a 5-minute chart or something. But yeah, such a crossing could such a break of 109.33 could retest the bottom of the day at 109.25, but that's pretty much it. Okay, so I mean it's a matter of consolidation, because it's ranging the whole day. So yeah, as long as you don't see it closing above or below this channel, consolidation and ranging markets expected to continue. Yeah, that's pretty much it. Matthews, I forgot. I didn't realize 60% in 4 seconds. That's fast. I don't know what what your. I don't know. What do you mean? What do you mean? What do you mean? Guys, any further questions? Running out of steam a bit. Already, there's still 200 people over here. I'm flattered. I'm flattered. Uh, oh, oh. Okay, that's euro dollar. By the way, that's euro dollar. Limited gains reverting. Oh, my dear Folari, ready to close the 109.33. Don't be mistaken, though. It's within a range, okay? So tradable are the bottoms and the top of the range. Also tradable, it will be if and only if it confirms a confirmed breakout of outside the channel. Okay, but for the time being, it's still there. There's no confirmation yet. You see it? Retesting it. Didn't. It's not closed yet though. Nonetheless. Um, because my dear friend, as we said earlier, Thomas, the jobless claims came out stronger. Okay, let me just put the 30 minutes chart. This is dollar, okay? So the reason for that dollar, Thomas, Thomas, that's the correct way. It's the fact that, okay, obviously you said that dollar is appreciating, but is still within weeks range, right? Okay, still within weeks range. Okay, that doesn't change. Now, if I zoom into the 30 minutes chart, we could see that it's rising the last 15 minutes, 56 minutes. Yeah, it's rising. But the reason for that, obviously, the US is, by the way, has opened. But we had contradictory results. Okay, we had inflation that was, it should have been dollar positive, and we had jobless claims that are dollar negative. So there is a lot of indecision. These are very contradictory data. So that's why initially we've seen the decline, but as soon as the jobless claims were out, we're seeing some confusion. Okay, we have seen some confusion. Basically, they were the releases were, I mean, 15 minutes different. I don't remember, but what matters is that we had contradictory um, data, mixed data. Uh, so um, so yeah, but nonetheless, dollar remains in a range. Okay, trying to recover some losses with the next resistance area at 102.73. As long as it doesn't extend above it, there is no indication that it will be in a bullish trend. Okay, key use as a key resistance level on this appreciation, the the ceiling that we got this morning, 102.73. If I check also my momentum indicators, you will see that, I mean, they are neutral to negative. I mean, so that suggests, my dear friend, that this rebound, it will be limited. Okay, possibly 102.70, and that's it. Limited rise, because the data are not really supporting. Um, um, they were a bit mixed, so they're not really supporting neither a positive dollar, neither a negative dollar, as explained earlier. Yeah, what else, guys? Anyway, don't worry. The live stream stays within the YouTube channel. So as soon as I'm done, you can drag and drop it. Go to the beginning of the live, and you can see my analysis, or you can go straight to the asset that you wish to see. Okay, to see the analysis that I have done. um Let me check whether there are any further news that I might have missed. Anything else? Okay, no, I think not. We have some stock moves. Yeah, we have some movement in stocks and energy. Don't forget there's an earnings season as well. What else? What else? Basically, we have some sell-off in technology sector, not really affecting or driving the dollar right now. But we have seen the stocks a bit lower. Is what I said earlier, guys. The markets are trying to digest and understand the data. One side, strong inflation indicates that Fed should consider either keeping rates unchanged in the next meeting or go ultra small, so not a 50 points rate cut, 25 or even less, while the jobless claim suggests the exact opposite thing, that they can continue cutting rates. Obviously, they will continue cutting rates. The question, the big question, is whether the data allow them to um, go fast or take it slow. Okay. Everything will get, I mean, we're gonna have a clearer view also with the upcoming retail sales and product numbers, and obviously the next NFP. But for the time being, what we are seeing is the stocks lower, dollar, okay, trying to recover some losses, but still in a ranging market. Gold appreciated, but as long as we don't see a break of 26.31, the consolidation might continue. As I said earlier, dollar yen extending lower, so yen is gaining some ground on the dollar indecision, the dollar uncertainty. And that's pretty much it, guys. Let me just check. Also, Nasdaq over here, pull back. So yeah, as I mentioned yesterday, earlier, sorry, stocks are lower into the U.S. Open. So we might see a bit of some corrections, some pullbacks. Guys, I'm gonna call it a date. Don't worry about it. If you just join, I have everything there. Drag and drop your cursor in the live streaming, and you can find euro, dollar, gold, oil. Have I done oil? I think so. No, I haven't done oil. My bad. Dollar, yen, cable, and that's pretty much it. Yeah. So, and dollars are. Yeah, I'm gonna call it a day. Thank you very much for coming. Any feedback is more than welcome. Okay, more than welcome. Let us know how you want us to improve our analysis, and we will do our best. You can either submit it as a comment in the messenger if you're using Facebook, or in our live support on our website, or in the messenger, in the inbox in Instagram. I cannot figure out other ways, or webinars at hfm.com email address, webinars at hfm.com email address. Your feedback is more than welcome. Let us know what you want us, how you want us to do the live streaming in order to help you even more. Thank you very much. Fox, you said, okay, I'm not, I will reply. I don't want to leave you, right? So will gold continue bearish or bullish movement? Okay, obviously I don't know if you're referring to the overall picture or not, but as I said, okay, we had this nice, impressive move. This is the 1 hour chart, okay? But as long as it doesn't uh, clearly, let's put the 30 minutes chart, okay? Let's assume that you're someone that is a scalper or something on intraday basis, or a very short-term trader. So as long, my dear friend, as it remains below 26.28 or even 26.30 territory, there is no indication that it could get back to Monday's highs. Okay, so for the time being, what I can see is consolidation. Why? Look at that. Up, quickly reverted losses, trying to recover again, but look at that. First of all, same highs for 3 sessions in a row, suggesting that it's struggling, that it's a lack of bulls. RSI, okay, 62, but ups and downs, consolidating, no. MACD over here, let me just, so, let me check also the high Kanashi for you, just to make sure. So, it's extending. Yeah, you need to wait, folks. You need to wait for this candle to close, because it's an important resistance area, okay? If there is no confirmed close of a candle of the session, there is no confirmation whether the bullish momentum movement will continue. What we are seeing is just swings over here, reverting again, retesting. Will it revert back again? Who knows? We need to see a close as your candle to confirm and close above yesterday's highs. Okay, so far we haven't seen a closure, a candle closing above yesterday's highs. This is what we are waiting. A candle to close above yesterday's highs. A key support area, resistance area at 26.28. Okay, I've put 26.28 because it coincides with the latest swing high. So that's a key resistance area. Indeed, there is some improvement in the momentum, but there is a lack of confirmation from the actual price action for the time being. Okay, so let's wait and see. So another swing high. So that wait 2 minutes. Okay, wait 2 minutes for that candle to close. This is a 15 minutes chart. Sorry, this is a 15 minutes chart. If indeed we have another massive big body candle in the 15 minutes chart, then that could indicate that there is some further room to the upside, limited one though, okay? 2630, 2635. But if and only if in a minute, actually let's wait, okay? Less than a minute left. But as I said, I'm not quite convinced yet regarding the a return back to the highs. But if folks, I don't know, I'm not convinced that it will get outside week's performance. Actually, yesterday's and today's range. But if I just go down to the 15 minutes chart, okay, just for your sake and only to help you with if you're scalping or something. So this candle is ready to close, okay? Oh, it already closed. My bad. It already closed, guys. Is keep pushing. So we can see that there is some bullish bias, but for the next few minutes, guys. Okay, this is a 15 minutes chart. It's super tight. Be careful. For the next few minutes, we might see further push of gold higher, but I am in a 15 minutes chart. Okay, remember. So 26.31, 26.35, okay, and only if and only because this was a very strong 15 minutes candle. There was a rebound. Moving average are pointing higher, extended above yesterday's highs at the 26.28 level that I had put a line on. RSI is pointing higher, but it's 15 minutes chart. So this is a potential bullish movement for the next few minutes, possibly even at top of the an hour. But it's a 15 minutes analysis. Okay, don't get confused. Overall, remains in 2 days range. As long as we don't see consecutive candles above, higher, moving above the 26.31 and extending higher, there is no indication yet that it could get back to last week's area. Okay, thank you very much. Have a great day ahead. Take care, and we're gonna see you again next week. Hopefully you enjoy it. Feedback is more than welcome, as I already mentioned. Thank you very much. Have a great day ahead. Take care. Take care. Earnings